So a few things happened today in this particular session, and they're all worth going over. It's important, no matter what your time frame is, to understand the fundamentals of economic numbers. Right now, it's obviously all about inflation. CPI is the biggest number that everybody's watching, including markets, as a gauge of where inflation is. The year over year has been a little bit more watched than in years past. So a couple things happened. It's the first month in a while that we missed to the downside from the forecast, which is technically bullish for equity markets because it's maybe showing inflation peaking and coming on the other side of the mountain. First time in several months, it got below 8%. So a little psychological element to that. But the month over month missed 0.2 to the downside. The ex-food energy component missed to the downside 0.2. So all across the board, month over month, year over year, and both, they all missed, and they all missed 0.2 to the downside, which is okay. Maybe the Fed rate hikes are starting to work their way through the economy, and it was a relief rally. That in part is important to understand. So you're not saying why, or you're not surprised. You minimize, eliminate surprises. So that scheduled release was that in this particular session. Then we spike 100 handles in the S&P, which is a huge move on a number or not. And what's important to note is the pullback off the initial spike was very, very small, which means shallow, which means, wait a second, they can't even, you spike like this and you can't even come back 25%, let alone 50%. If the market starts down there and it spikes up here and it can't even come back 30% and then re-rally, which would be strong. Now it's really strong when it comes in shallow and then continues its move up. And it's important to gauge that because it becomes a beach ball underwater metaphor where price is just not expensive. It's strong, big difference. So you could fade a market that you can understand and describe as being expensive because things that are expensive would come down in price. But when it's strong, and this is one way to read that, a number that came in, beat expectations, we spike 100 and barely retrace and have this shallow pullback, it keeps you minimizing the fade, in this case, shorts you might take in this condition. It might minimize how many you take. It certainly can minimize holding on to it, being stubborn with it, knowing that the right side is probably the long side. So then on pullbacks that we do get throughout the course of this session, a few things could line up that at least get you from getting stuck in the hole. That was an old floor phrase where the market comes down. It shows that, there's a hole there and people are short down in here. That's being stuck in the hole, short down here. You want to avoid doing that. So there are a few things happen. Over here on our chaser, a bunch of buy inventory shows up, flashes in. You get a sell market order that quickly gets rejected. And you get a big iceberg, which is this red line that shows up of selling. When you get a market that's selling off, like we all know that it just sold off right from here down to here. We know what it's been doing. We don't always know it's going to bounce, but we're trying to stack probabilities. We're trying to collect some evidence, some clues. So when number one, you get a big sell order, it usually should move the market lower. If it doesn't, you have to scratch your head. When you get buyers that show up, you might have found the buyers you needed to go the other way. When you get too many sellers that have stacked the book, they're at capacity sometimes. It's only going to get so high. This number doesn't get much higher than 3,000 generally, right? Because there's only so much selling before you have to go back the other way. Now, the iceberg is important because it's like, think about your own trading. And if you have to sell it and the market's going down and you're feeling more pain, you finally say, screw it. And you sell it. And then it boom goes right back up. And you're like, sure enough, soon as I get shorter, soon as I sell and puke my long, it goes up. And that's because a lot of people were stuck with you. So when I see selling that finally comes in and it's big, it's like, they maybe just capitulated and puked it. All right. Then the last bit of evidence. So you got 1, you got 2, you got 3 with this big sell market order. You got 4 with this iceberg. And then you get our laser, which shows other shorts that could be stuck in the hole, like I started this example with. So when we play it, you'll see our laser shrink and go from pretty long to short to red, which look at the colors in here. Shorts are literally getting stuck in the hole. People are looking for the market to go down because it went down. And how many times do you reach, which define a bad location? And that's because you're only using price to predict price. It's like only using rain to predict rain. I'm getting wet, it's going to rain. Well, no kidding. You're too late. I hear thunder, gray clouds. Hey, I think it's going to rain. Well, thanks for the heads up. No, I need to know it might rain before I have that blatant evidence, or else you're going to be late in that prediction. So you see the bounce that we had when you line things up. And this isn't something that you only see in hindsight. And in this room, you get the be careful short moments. You get the shorts just came in. You get the sell iceberg that came in late. Why? You get the rejection of that short while it's happening. You combine all those things to either keep you from being stuck short, because saving money is like making money. But then if you're bullish and you're looking to qualify a level anyways, that's what you're looking to pull the trigger. You're never just going to use support level, line, whatever it is, as the only way to execute trades. So if you have a support line here, I don't give an SHIT if it's the best support line in the world. You're not going to make a living by waiting for the price to come down. You rest a bit in here. It's going to fill you and then go up. Life is good. Not going to happen. Best support in the world still won't happen. Because the reality of it is, a lot of times when it works, it comes up right above it. And you were right, but you're not on the team, got nothing to show for it. But when it doesn't work, you're wearing it because it fills you and it goes. Or it just feels like you're on the railroad tracks and the train is coming to you and you're not qualifying whether or not it has a better chance of stopping. You're just hoping now. So if you lay a bit at support and it's the support level that makes you think it's going to be a good place to get long, you're going to feel like you're hoping when it gets close. You're going to be more nervous than you need to be. You have to have some skill to qualify and disqualify your locations, your levels. Care less where you get the level from. You got to qualify it, because those that aren't qualifying and disqualifying, they're not doing it because they don't have the skill to do it. They're the ones that are just using the level and just using price to make their decisions. You got to go a step further. You want them to actually be stuck short into this area. You want to see them actually have maybe the support level get breached if it's a popular support level. If you think it's not your support level, but you think it's a popular market support level, it goes through it a little bit. Yeah, they get long, but they get shook out and then it goes. You have to have reads that are conducive to what others are thinking. You're trading against not just the market and the price, but the market is other people's positions. And it's that herd mentality. If you're with the herd and the herd is wrong, you're in trouble. But if you just stand in front of the herd and you don't qualify it, they'll run you over. And so it's all about too long, too short, capacity of how much more selling could actually come in and where we could qualify a bounce. And it's not about having it go up forever. And some people would say, yeah, it went up 12 points, but it came back down. Well, what are you looking for? You got to be right for a few points before you're going to be right for a few more points. Goes back to saying that old joke when I talk to someone on the phone, they go, Anthony, I look for 15, 20 point winners though. I said, well, I like two blondes and a brunette. Not always possible. Your eyes are bigger than your stomach. You got to qualify and be good for a 2 point. Not that you always have to take small winners, but you got to be right in your predictive ability for 2 points effortlessly before you get your 5, before you get your 10. If you just want 15, 20 point winners and you're going to willing to take 10 points of heat, good luck. You'll never build any size with the expectation to take a lot of heat. You'll never build any decent size with the expectation of always having to take a lot of heat with every time you're going to trade. You'll never build size. You'll never gain confidence because you know in your mind, consciously and subconsciously, that every trade's got to have pain attached to it. It's going to cause you to miss trades. And the more trades you miss, the more winners you miss, The more winners you miss, the more pissed you get. The more pissed you get, the more things you do outside your strategy. And now you're just taking shots. I know most people who trade will fall victims to just taking shots. They'll blow off any kind of strategy plan that they have, and they'll revert to taking shots, whether they add to losers or not, taking shots all over the place. No skill. So you have to be able to do something better or more than people who just play lines on the chart. You want to have a better ability to create an opinion, but you have to have that third step, that fire moment. When do I literally start to use my ammunition? Am I using it efficiently or have a chance to hit the target? Or am I just taking aimless shots? If I don't hit the deer with 3 or 4 shots, boom, they're gone for the next 5 hours. You got to have a progression, and you got to think, what could I do that others are not doing?